Hey guys, today is Tuesday, February 23rd, 2020, 2021 actually. I haven't made a video for a while, so let's take a look at the market. Um, you can see that today a lot of kind of high-flying concept or technology shares have essentially crashed, right? So for example, Workhorse today is right now is crashed by more than 50%. So it's a flash crash. So we are taking a look at companies like Tesla, Neo. These leading ones are all have a very similar chart. They all corrected quite a lot. On the contrary, if we look at the Hilton HLT and all these uh, hotels, airlines in the traditional industries, they're actually doing fine during this market correction. So the correction is actually very sector concentrated. So most of the high flying ones in the EV sectors, uh, in the technology, especially Apple, Amazon, they have corrected quite a bit. But all the other ones, like traditional sector, they have actually been up even during the day. So there has been, it has been, it's been quite a ride since the March low, and all these technology stocks has been outperforming the entire stock market, and so it's pretty normal to see some volatilities after a period of very flat, doing nothing. For example, here, if you look at the Jumia, just give one example from January 22nd to February 22nd, for the entire month, you can see the volatility is extremely low. And right now, we just have this kind of volatility expansion, and which is very normal in this environment, in stock market in general. So regarding to these technology companies, I don't recommend adding to the position. If you have existing position, keep holding it. For some that really there are some stocks that are still on the radar. And for example, one of my favorite companies, STC, Smile Direct Club, I still hold. I'm buying a little bit at a time as this thing dips. So I'm just buying every single dip. I think this company has a lot of promise, and one thing is that this company has been under the radar for a long time. Another company is Dropbox. Dropbox has gone down. Has been in this trading range for almost 2 years, more than 2 years actually. So it has gone nowhere. But this company actually has had a decent growth, a decent revenue. I think is really undervalued right now. Another company I personally invest in is XNet. This is just a blockchain play. I bought around $3, and now it corrected quite a bit during the day today, but I'm still holding on to it. And another SPAC play I just entered today. There's a reason I'm making a video because I'm shuffling a lot of positions around. I actually sold quite a lot of my shares a couple of days ago, so you can see I mean you can say that I have a foresight of seeing this crash. I don't. I just sold maybe 50% of my stock portfolio 2 days ago. Actually, last Friday, and also early Monday. The reason is a lot of my stock are just not moving. For example, GIK. If you look at this chart, I sold around here because this thing has making a lower low, lower high. So I sold it. That was one of my largest position. Because I was betting on the SPAC play to play out before the merger, but then it started flattening out, and I basically sold it just to kind of keeping my risk under check, right? So because I see this thing kind of broke the trend and start going horizontal, so I sold it. And there are a couple other stocks like this, and I sold. So essentially, I liquidated maybe half my portfolio a couple of days ago, and I got lucky. So right now I'm buying in more. I bought more VGAC today, which is a SPAC play of 23andMe. And 23andMe is a genetic testing service which allows you to basically send your saliva over, and they're going to analyze your DNA and give you a report on your results, right? What kind of disease you could potentially have. Do you have any genetic defects, all that stuff? So 23andMe, I think, is kind of interesting company, and which I have used a couple years ago. Their biggest challenge is that they don't have a recurring subscription model, and so they don't have. They're trying to build their recurring revenue, but I don't think so far it has succeeded. So it's a kind of one-time purchase. So that's the risk about this company. But I think this company has a good story. So I think right now this SPAC has fallen since the initial spike of the merger announcement. It spiked quite a bit to $18, and now it basically fell to $11, because all the SPACs have a $10 kind of floor before the merger. So I basically bought some because I'm right here. I'm just paying $1 premium, right? So even if it falls by another 10%. Is $10, and I think the downside. I mean, not I think that literally the downside right now is roughly 10%. So that's a low risk play. So I bought it quite a bit today. Another thing is that there are a couple of them went down quite a bit. So some of the SPACs are close to their kind of intrinsic value, not intrinsic value, but their floor value, which is $10. You can actually enter them. GIK, another thing today, dipped down to $11, so I could have picked up more. I bought my shares back. I have not, because maybe this thing's going to dip lower and kind of flatten out. If it does flatten out, I am going to buy my shares back at the $11 or $10 level. Okay, so let's take a look at the cryptocurrency right now. Cryptocurrency market has changed quite a bit since my last video. I was looking at Ethereum at, I don't know. I remember I was looking at Ethereum like this here, and it came down. It never realized what my prediction was. Basically, it went horizontal, then it made a new high to 2,000. So actually, what happened was during that time, I knew my hypothesis was completely wrong, so I reversed my position, went long. I rode all the way to even right now, I still hold my position. In addition to Ethereum, I have added quite a more crypto, different altcoins or whatever you call that, altcoins into my portfolio. One of my best performer, one of my heavy position is Polkadot. I bought them around $7 here, and now is 32. I'm not adding to my position, but I'm holding on to this. This one is extremely strong, even in the recent dip. You can see that it hasn't really gone much down from the top, right? So Polkadot is especially strong. And some other my holdings are, for example, Refinance, which is another product based on the Polkadot that is trying to create a decentralized exchange, essentially like Uniswap, but it's an exchange aggregator similar to the 1inch, which is based on Ethereum. So Refinance something I also invested in. I got around 0.01. Okay, so let's talk about the Ethereum and Bitcoin right now. What I'm expecting Ethereum and Bitcoin to behave from this point on. As you can see that, I've been talking about buying Ethereum when it was like $100. Now is 1,578. It went to 2,000. So you would have made 20 times the gain since last March. And one thing I want to mention here is that what I'm expecting right now is that I think we have hit a consolidation zone where I think what's going to happen in the next 2 months is that we are probably going to try to push to the previous high, probably even go above it to the 2,300 level. and then we're probably gonna come down again to shake out more weak hands. We're probably just gonna consolidate here with high volatility and high kind of this kind of range between the 1300 to 2300, and then we're probably gonna break out to the upside to the 4000 range by June to August. So that's what I'm expecting with Ethereum's gonna go. And after that, we have to see. We have to see how the market behaves after that. So in the meantime, I don't think selling here is wise. I actually think that every time we dip down to the 1300, 1400 points, it's actually wise to add to your position. I expect that we're probably gonna make a pattern similar to here as well, where we had a dip, we came down, we made a low, we consolidate here, then we're going to push to a higher level, then we'll come down again and form a double bottom. So I think we're probably gonna have a double bottom here. So if you didn't get at this level, maybe it's gonna dip down again next month, a month after, and you can enter again. And now another one my holding is Maker. Maker is another DeFi application on Ethereum. If you look at the DeFi Pulse, DeFi Pulse is basically a ranking of the TVL, total value locked, inside of DeFi on the Ethereum blockchain. And you can see that Maker has been, is the number one, still the number one DeFi app in terms of the TVL. However, the market cap of Maker has not been kind of fully realized in my opinion, because the market cap of Maker is actually much lower than its counterparts. For example, Compound, Aave, Curve Finance, they all have much higher market cap. Their token have much higher market cap than Maker token. However, what's interesting here is that if you look at CoinMarketCap.com, the Maker token is has a very limited supply of only 1 million tokens. So if I'm gonna, where's Maker? Right here, number 35. It has only, actually right now, the Maker is getting burned by the Maker DAO system. I'm not gonna go into that, but the Maker tokenomics is designed as a deflationary token supply. So basically every year, every month, the Maker MKR is getting burned. So it's gone. So what happens is this total supply is going to shrink every month. And there's only 1 million tokens. There are only 1 million tokens. As opposed to, for example, something with much higher market cap, Aave, the token supply is still expanding right now. They have not fully issued all the tokens. Uniswap is at $7 billion market cap, but only 1/3 of that token is actually in circulation. So the total diluted market cap for Uniswap is $24 billion. It's $24 billion. So the market is actually valuing Uniswap as a $24 billion company. Okay, and it's not even on the top three. Uniswap is number 5. You can see that for Maker, the actual market cap right now is only 2.2 billion. So Uniswap is 10 times the Maker, but on the DeFi ranking, Uniswap is not even close to Maker. It's half the size of Maker. So this is just a total mispricing of the market right now. I think Maker is severely undervalued compared to all the other DeFi tokens out there. I think eventually the value of Maker is going to be realized, and in the next couple months, I personally believe that we are going to see Maker the token to even reach 25,000 to even 50,000. Okay, 25,000 to 50,000 from this point on, which is 20 times even if we bought here. I think eventually Maker is going to probably go to 50,000, which is 100 times return from the low level. Okay, so that's all I want to talk about today, and see you next time.